Nick Elder, Trinity Peak Partners, Ironton Capital, Flipper, World Traveler. My friend, how you doing?
I'm awesome. How are you doing, Chris?
I'm doing well.
Awesome, man.
We just had a nice little pre-talk about the franchise I bought and deals you're looking at. But I want to start just by asking you, because I'm selfish. I'm a selfish man. How's my deal going in Arkansas? How's our deal going in Arkansas?
Man, it's going great. You'll see an update email coming out soon, but we're through the interior renovations. I think I'll send you some before and afters of the show units that we have. But man, it looks great. It looks great. The interiors are done. We're doing some exterior things. We're adding a pergola and a grill, a little hangout area that wasn't there originally. We're adding some solar panel security lights onto the property as well. So it's looking really good. The city's widening the street that's right next to our property to increase traffic flow. So that's good. The downside to it is it's in the way of the property at the moment, but that's okay. I mean, at the end of the day, we have 14 guest cards. So these are people that are interested in touring the property. So that's more than half, to the 25 units. So if we can get those people in, get the pre-leasing going, some of the tenants that we've showed the property to have given good feedback. I thought the pricing was very accurate, so it's really interesting and it's cool because we're really, we're in the forefront of trying to lift the stigma of that area. Right. And so it's really exciting to kind of be at the forefront of trying to, bring that area up to a premium and offer new renovated units to these tenants that aren't used to seeing it. So it's going well, man. We're making good progress, and we'll hope to have even better news for you in several months when we get that occupancy up to where we want it to be.
Nice. So for those of the folks who listen who don't know, this is Fayetteville, Arkansas, right? Arkansas is a very landlord-friendly place. Mm-hmm. It's an up-and-coming place.
Yes.
A lot of big companies are headquartering there or opening hubs there. It's just, what is it, south of Bentonville? It's south.
Yeah. So you've got Bentonville up north. Bentonville itself is that's where Walmart headquarters is, and they brought a lot of. It's not even just Walmart. They brought a lot of their major suppliers in town. It's amazing the amount of leverage they have, not just for growing the city, but also for bringing other companies in. I mean, they literally say you have to have a presence here if we're going to continue to do business with you. So if you look out into Bentonville, not only is Walmart there, but you see Kellogg's, Coca-Cola, office buildings, a lot of those major brands that have a huge presence inside of Walmart. But anyway, you've got Bentonville, which is about Bentonville and Rogers right next to it. That's about 110,000 person population. And then you go about 15 to 20 minutes south, you hit Springdale, Arkansas, more working class area, but that's another 100,000 population. And then 15 minutes south, you've got Fayetteville, Arkansas, which is where the University of Arkansas is. That's another about 97,000 person population. So when you connect Fayetteville, Springdale, Bentonville, and Rogers, I mean, you're at almost 500,000 people that's projected to get to 1 million by 2040. So it's growing. It's an exciting place to be. And everybody that you talk to that lives there, they love living there, which is always a good sign. Nobody's trying to get out. They want to keep people from coming in, but everybody really loves living there. And that's one thing that really kind of draws me to Northwest Arkansas is that the quality of life that people actually truly experience there.
Yeah, I actually got hot to trot on investing there and even visiting Bentonville because of the mountain biking. It's like a mountain biking mecca.
Yeah.
For that part of the world. And here I am, a Colorado kid, actually considering going to Arkansas
to
ride. But, the Walmart family has put in, I don't know, millions, tens of millions worth of pretty epic trails. Mm-hmm. I've heard really good things about the quality of life there. That's why one of the many reasons I was in. On this deal. So remind me, this is a 5-year, 7-year play, right? It's a turnaround on a multifamily, which is what you and I know so well.
100%. hopefully much sooner than that. Our intention is once we get this thing to 90% occupancy before the end of the year, we'll prove out an operational history of maybe 6 months. But we're going to engage with. I've got mortgage broker contacts and the commercial brokers there on what a refinance looks like if we were to hold it for a little bit longer. What does it look like to actually sell this property? Can we get for it what we think we can get for it? So we'll see. I hope to be out of it much sooner than 5 years, hopefully sooner than 3 years, so we can get your money back and you can redeploy it into that new business of yours. So, or into another project, who knows?
Yeah, or onto your next deal, right? Because once you've performed, and your investor base is excited,
Yep.
they want to do the next one and the next one and the next one, and then eventually you don't go asking, they come asking.
Yeah.
Right.
Yeah. That's the goal. That's the goal to get to, for sure.
Yeah, I see that. I see that in your future. I'm at that point where investors call me and they ask me, what's going on, what deals are available, what loans they can invest in and stuff like that.
Yeah.
That's
a little bit. I'm going to reverse this and ask you the question. I want to hear about how you went from where I was at hustling to get investors to now you've got investors coming to you. What was that journey like?
I started, as you know, I started with nothing, and I couldn't even guarantee debt. And I gave LPs incredibly sweet deals just to get started. I started syndicating before I knew what the word syndication was.
Yeah.
Right. I took a really basic real estate investing class and it was about, flipping or buy and hold houses. Right. And I was hard up. I was in a really tough place in life. And this is, well over a decade ago. And so I said, well, I can do this, but I don't want to do this with one unit. I got to do this with many units.
Mm-hmm.
So I started with an 8-plex and then later did a 16, then later did a house package of about 30. And I just kept growing it.
Yeah.
But yeah, I started with, okay, investors, if you can guarantee the debt and give me all the money, I will do all the work.
Yeah.
And you get 100% of the income until you're made whole. Then we split it. Right. Mm-hmm. That was my first structure. Now, obviously, as I got better and understood this, then it and performed, right, I could make terms a little better for me as the sponsor, the general partner. But it was one by one. I'm talking, with investors. It was investor 1, and then it was investor 2, and then it was really one by one. Now that I think about it.
Yeah.
And then I started to get multiple investors on deals around that when I did that 16 unit. And then now with debt investing, there might be max 4 people in on a loan.
Okay.
If it's a bigger loan. But dude, that wasn't a short time. Mm-hmm. That took approximately a decade, maybe 8 to 10 years.
Yeah.
To go from 1 to 1 to, I guess I've never had anybody other than the funds I've worked for, right, where we have a bunch of investors. Mm-hmm. But for my personal syndications and my personal, debt deals, I've never had more than 4 people in a single deal.
Yeah.
But those people that started with $100,000, well, now they're all richer. And mm-hmm. so they can stroke $200,000, $300,000, $500,000 checks. So I've really grown it as organically as you can really grow it.
Yeah.
And even with my quote unquote social media, right, with my business media, which I'm not super heavy in, but I'm getting 100 views, and 4 people are calling me for that deal, and investing within a week. So super grassroots. That's been my trajectory. I haven't exploded. I've just one by one, inch by inch. And you certainly have that skill set to do that. I think you'll probably do it faster than me because you've got a gig at Ironton Capital. You've got really high-end mentors that are supporting you. And so you get to see kind of the end of people who are, managing 10, 50, 100 million and up in terms of the micro investment funds and syndications. And micro, for us, anything micro is under 300 million.
Mm-hmm.
So you can be rocking it in our world. You can be rocking and rolling with $100 million, $50 million. And I've never done anything even remotely that big at one time. So, yeah, I mean, I see you doing something very similar, but just faster, right? Because you've got that gas on the fire and you've got the path. Remember, I started when I didn't even know what the word syndication meant.
Yeah.
Right?
You were doing it before syndication was called syndication.
Yeah. I was like, this is an apartment building. I think it can make us money. Let's, please, investor number one. This is why I think it will work. And thank goodness they believed in me. And thank goodness it worked. And then it worked and worked and worked. So, that's essentially my journey.
Yeah, what's important is like the time factor. One of the things you taught, you said it took 8 to 10 years to get there. Even if I could do it a little bit faster, I'm not having that expectation. I look at the founder of Ironton Capital. I get to work with one of the smartest guys I ever know, and he makes things look really easy right now, but it's taken him 25 years to make it look that easy and to build trust among so many people. Right? It's unbelievable. And I was talking to another operator here in Colorado. I got lunch with him a little bit ago, and big flipper leading up to 0809, made a ton of money. Him and his brother crushed it. And then they started buying up their own apartment complexes, and they had 400 to 500 units just under their own name. He's like, I did it for 10 years. He's like, all of a sudden I got to year 10 and I just looked back at everything. I was like, holy crap. Some of those things just take time. It takes time to build trust, to build that track record. And in our modern day society, we want things now. We want 100 million in AUM now. Or we want $1 million now, but it takes just so much effort and time in reality. We just got to respect that patience and, time,
Yeah. That's exactly right. And are you playing a finite game or an infinite game? Right.
Yeah.
And, I love the idea of get in the game and stay in the game.
Yeah.
If you can get in the game and stay in the game, just sheer longevity will make you successful. And whether that longevity is 10 years or 20 years or however long, one of my childhood friends is Meb Faber, and I watch his podcast, and he just hit 1 billion, I think. And I think it took him 17 years, or maybe he posted this on LinkedIn. Anyway, it took him 17 years. Mm-hmm. Most people don't have the stones, the stomach, the constitution, whatever you want to say, to stick with anything for 17 years.
Right.
And if you're an entrepreneur, and you start over every 3 years, that's a rough go of it, right? So I guess in my humble opinion, you got to find something that you like, that you're competent in, that you think you'll be in for the rest of your life. Something like real estate, right? Yep. And get in that real estate game and stay in that real estate game. Now you could pivot from general contractor to agent, and then maybe you get so good that you're a GC on apartment buildings, and then maybe you start syndication. There's so many things that you can do adjacent to or add on, but get in an industry and stay in that industry. At least I think that increases the probability of success, certainly.
Absolutely.
Right?
Oh yeah. It comes down to outlasting everybody else. So many people, they don't want to stick with it for 20 years, but years 1 through, excuse me, 18, they might just be grinding it out and not seeing a bunch more than 19 and 20. It's like the hockey stick curve. It catapults, and all that work from years 1 to 18 is everything. And, that's one of the things that, my uncle, who I look up to, he's a VP at Merrill Lynch, but he has his own wealth management practice in Pennsylvania. And that's one of the things he said. He's like, I made calls more than anybody else, and I outlasted everybody else. And now he's got, 750 million in assets under management. He just, and he plays golf 3-4 days a week, but he just outlasted everybody. He was in the office making calls, finding clients. He was doing more than everybody else at the time. And then, he started seeing some people just kind of drop out, switch careers, or just not stick with it. But he stuck with it, and now look at him.
Yeah.
He was hemorrhaging money for some time, and then raising a family. But now he gets to golf 4 days a week, and he doesn't have to do anything to source new clients. It's all referrals, but it takes 20 years. It takes 20 years to do that, and you got to be willing to stick with it.
Yeah, it sure is easy to look at guys like your uncle and be like, oh, I want that, and
Yeah.
then after a year, you're like, well, I don't have that. Well, of course you don't have that in a year. It took that dude 20, 25 years.
Yep.
Right. So it's one of those, don't wish for somebody else's life. You might want somebody else's results, but are you willing to go through all the stuff that somebody else went through in order to yield those results? Right. So, there can be a short-sightedness in your perception. And I hope I can articulate that to my kids as, hey, nothing worth a darn happens overnight.
Mm-hmm.
And there's that famous saying, people overestimate what they can do in a year and underestimate what they can do in a decade.
Yeah.
I mean, even 5 years, within 5 years in any industry, you can change your life, but you got to stick with it for 5 years. And the first few years, they're no fun. Right. And I'm entering that space right now where I'm starting although it's real estate, right? Because I'm real estate till the day I die.
Yeah.
Right. So this is real estate, but this is, I've acquired a high-end painting and resurfacing company, and it's a franchise. And I acquired an existing franchise plus some zones and plus first right of refusal for another zone. And so I'm starting over to a degree, but I'm leveraging my private equity experience and I'm leveraging my real estate network in the areas I got. So it's very adjacent to everything I've done. And it's one of those things I wish I had when I was flipping apartment buildings, when I was doing these syndications. But still, I'm in that zone where I'm going to suffer for a year or two because I've acquired apartment buildings. I've acquired, packages of houses. I've acquired commercial and residential real estate and lent on all that stuff. But I've always paid people to work on it. Right. Mm-hmm. None of what I have acquired prior to has been a business that was so people dependent. Mm-hmm. This new acquisition is a people dependent business. So I'm hedging and filling the gaps in my knowledge with a master manager, right? With a master operator. So I brought a master operator in as an equity partner, so I don't have to experience all the pain, but it's still a new deal, right? And so it's a private equity deal, but it's not. I parallel it to an apartment building, but the mechanics are different, right? It's still touching the industry that I'm an expert in, but the mechanics are different. So I'm already, we'll call it the suffering of a new, right? Yeah. I'm already getting that new suffering experience. I'm like, wow, I haven't experienced this in a while.
You've done it though, but you have experienced it, and look where you are now. So again, it's just like, part of it is like, if you're just starting out on something, like if you haven't gone through that suffering of like entrepreneurship or building something yourself, you haven't gone through it, you can be so tempted to you don't know what the other side looks like, unless you're studying, the experiences of other entrepreneurs and you see what they went through. So you can kind of try to relate to it, but you haven't experienced like that level of suffering of entrepreneurship until you actually go through it, right? But you've gone through it. You've done multiple syndications. You started your own debt fund. You've experienced that, and you've come out the other end much further ahead probably than you expected when you first started it. When you were young, you were figuring it out. You didn't even know what syndication meant, but you were doing it. Now you're just you're preaching to you're preaching. I mean, you're saying you stick with it. You outlast everybody, and you put in the work. And you're good to people, and you're delivering a good customer service experience, which is important in the painting business or in any business for that matter. Like you're gonna outlast most other people. And we were just talking about before we actually jumped in here, in the trades world, if you're somebody that shows up on time, you deliver good customer experience, you don't rip people off, and you show up sober, You can be so much further ahead. You haven't even actually painted the building yet. You know what I mean? So you can be so much further ahead than so many other people because it's such an in demand. The trades is so in demand. People are getting older that have been in it, and there's not enough newer people or younger people coming into it to replace that. So I mean, you're in demand now. You're only going to become more in demand, and if you're delivering an excellent customer experience, then people are going to have no reason to go to anybody else other than yourself and your company.
Yeah.
You know,
Buying a trades focused business is the way I've been able to calm my nerves, right? Because we're going to manage more people than I've ever managed before, right? But luckily for me, my partner has managed 800 clients and 70 employees for years, right? So I've got that on me. But what I've been able to do to kind of calm my nerves, because I've got all these people depending on me, and it's just a little outside of my comfort level, is I've just been paralleling it to the apartment buildings I've purchased. And if you zoom out enough, right, a business is a business.
mm-hmm.
And as long as you know that industry, which is real estate, and making real estate nice, right, and habitable and beautiful and appealing, and I've got that now that I can zoom out a bit and go, okay, well, this is just, CapEx here.
Yeah.
And this is just payroll. And this is just a client base. The client base might as well be your renters, right? Your tenants.
Mm-hmm.
There's a lot of parallels. Now, some of the mechanics are different, but from the 10,000 foot view, they're parallel. So once you zoom out, you can say, okay, well, I can compartmentalize this in my brain. I can wrap my brain around it, and we can do this. And then just like anybody else, if you're flipping an apartment building or flipping a farm,
Mm-hmm.
you need the right players in place, right? I mean, all the farm deals that I've done, all of them, well, except for one, all but one, I should say, I've never stepped foot on that dirt.
Yeah.
Not one.
Yeah.
But my partners have.
Yep.
My partners who are excellent at farm deals, they all have, right?
Mm-hmm.
Am I the guy out there painting? Nope.
Yeah.
I'm going to learn to paint,
Yeah.
right? I want to be.
You're gonna have a lot more fun painting than you did in the past, for sure. Now that you're an owner.
It's totally true. That we use spray guns and all that stuff, but at the end of the day, they don't want me on site painting. They want a master painter, right?
Yeah.
So just like when you're doing your apartment building, are you the one replacing the windows? Of course not. Right. So it's about managing people. It's about managing capital. Like you said, it's about treating your customers very well, whether it's your tenants, your employees, your investors. You treat people the way you want to be treated. So I've just gone on my first few consults for SprayNet, and I walk in there, and I'm not the expert on the custom chemistry we have or the exact application process that's patented. I'm working on that. But what I am an expert in is real estate, right? And adding value to real estate. So whether I'm going into a $500,000 house or, a $2 million house, which has kind of been the spread of my first few consults, I'm an expert. So I can talk all day about how to improve their property in order to sell it. Yeah. So I had no idea that the last 10, 20 years of real estate, I was preparing myself to pitch, resurfacing your cabinets. But I go in there and, I'm like, listen, I've done this. I've had cabinets painted. I've replaced cabinets. I know the prices on all this. So it's been a really easy entry to be just a paint salesman, right? I mean, granted, we're a little fancier than a paint salesman, or a lot fancier, but it's been an easy entry in that sense because of the 20 years I've been doing real estate. Yeah. So, I mean, I'm predicting the same for you, dude. I am predicting the same for you, regardless of what you acquire. You're flipping houses, right? You're doing syndications in other states. You're working for a private equity fund that's buying huge portfolios and ground up and all that. Yeah. Who knows what you're going to be doing in 10 years, but I bet it's going to be real estate, and I bet you're going to be awesome at it.
Yeah, I hope so. I mean, it's been it's been inspiring to watch your story because I don't know anybody that's touched the different facets of real estate in so many different ways like you have. In this latest venture, you've done the syndications, you've lent on real estate. So you've been the owner of real estate where you've raised the money and operated it. You've lent on it. Now you're painting it. I mean, it's pretty crazy. But I think what's so interesting, and this is just a thought that like popping in my head, is you've got so much of that experience. And like, let's just say, you wanted to take more of the owner operator type of role again, right? You have such unique insight from owning this painting business, and you could get exposed to so many different deals and opportunities that you might not even be aware of yet, which is so interesting. And that's just something that I was thinking about. Like, here you are showing up, you're talking to the owner directly, and you never know, like they might want to just get rid of a property, or they might own a property that they're trying to get rid of. And like, here you are, not just the guy that owns a painting business, but here's the guy that's lent on that real estate, the guy that's owned and operated it, raised the money for it, generated profits for investors. Like, a very unique perspective that you have that I guarantee nobody else showing up at somebody's door painting their house has. So it's super interesting, the kind of perspective that you have and the experience that you've had. It's such a wide range of things, and you're touching real estate in like, so many different ways that most people just do not do or have the capability to do. It's interesting.
Yeah, it's fun. It's fun. I'm lucky. Real estate kind of turned my financial life around.
Mm-hmm.
I also watched my dad, who was a civil engineer and commercial. He called himself a owner's rep, but he was a fee developer, right? He was a fee developer, right? And so he had rentals growing up. So I've been exposed to real estate my whole life. And I didn't know how much training I was getting back then. I was like, no, screw your dad. I'm going to go play music for a living, which I did. But yeah, it's been a long educational process that really never ends.
Yeah.
Listen, Nick, you're reading my mind. So I'm just going to throw this out there. You're kind of reading my future.
Okay.
I am very interested in acquiring some commercial spaces.
Yeah.
Not only to house SprayNet in our fleet of trucks and trailers, but to have a personal workshop, wood shop, and also as a straight up investment, right? So we're looking for some industrial space that could have, 10 bays, maybe more. And I'll put the deal together, and I'll be, obviously find the financing, maybe finance it myself. I'll put the investors together, and then I'll be a tenant, one of the tenants.
Yeah.
And then we'll obviously fill it up with other tenants, similar to what Terrence did, right? So Terrence Doyle of Verico, I mean, he built himself what I used to call Terrence Depot, right? Mm-hmm. So he noticed he had issues with supply chain, and they're like, we're not going to get caught by supply chain issues ever again. They bought industrial space, they bought a warehouse, they stock it with the stuff they need to operate their apartment buildings. And they have in-house construction and all that. And then they rented out the rest of the bays. I mean, he planted that seed in my brain, a few years ago. Yeah. And that is the next, we're going to start putting out our feelers soon. Once this SprayNet is stabilized, that's going to be the next acquisition. And of course I'll syndicate it and run it and operate it and occupy the space as well. So you're reading my future, Nick.
Yeah, the more I get into this business, the more that I'm learning that you want to mitigate and lower the risk to your investors and to yourself as much as possible, right? And you can do it a number of ways by having a very financially savvy, sophisticated underwriting team who's been in the industry for a while. But the more hands you touch in the process, and I think the more control that you have over the process, that there's not a number that can reflect how much that lowers the risk to you and your investors. You know what I mean? If you're controlling, let's just say, the property management, if you're controlling the supply chain, if you're controlling the construction aspect of it, and you've got oversight over all of it, that's huge. And you can operate with so much more control. People say vertical integration, and that is important. And, in Ironton Capital, that's one of the things that we look for. We look for operators that has that vertical integration. and you can clearly see their track record and performance and what they're able to accomplish and the competitive advantage that they have over their competitors through their vertical integration model. The more parts of the process you control, the more, the greater the likelihood of success of that investment or that business or that endeavor, whatever it may be. So, that was something that I learned. I got into this business 2 years ago, and I was just learning everything and soaking up a bunch of knowledge. And that was one thing that I'm really starting to understand more and more is owning and controlling as much of the process as possible.
Yeah.
It sounds like, obviously Terrence Doyle does that very well. A lot of the investors that we invest with at Ironton Capital, the sponsors, they do that well. And you start to also see some gaps. You start to also see some weaknesses in the chain when you start to understand those processes you don't control,
That's right.
I mean, I'll be honest, if you're a fund of a fund type of company, there's a lot of control that you don't have, right?
Yeah.
You've got very financially savvy, sophisticated guys at the fund of a fund company, and I'm just, using that as an example, that don't have any control in the operation of that project in Tampa Bay, Florida, right? So it's very important, and if you can capture control of that process, I think you're setting yourself up for greater success.
Well, that's right. I mean, how many flippers, syndicators, general partners, sponsors have been held up by a tradesman gone wild? Let's say electrical. Yeah. I'll raise my hand. I have been screwed. We were flipping an apartment building, and I got screwed by an electrician and his company. And we had to fire them, and then we had to hire somebody else. And of course, we paid them, right? And they wouldn't fix what they screwed up, so we had to hire somebody else and come in. Anyway, it was a net loss, but they held up they delayed the project. They cost the project money. That's one of many examples.
Yeah.
Where you can get held up. So the more you can have in-house, the better. Now, you can't be a master of everything, but there are organizations who are very good at managing almost everything, right? Yeah. But that doesn't mean the head honcho is a master of everything. Yep. It means he's gathering the masters of everything, right? Mm-hmm. So in-house plumbing, in-house electrical, in-house roofing, and you name it, or really tight sub relationships or really tight vendor relationships that have been proven. I mean, I'll tell you this story. We went into Amarillo, Texas, and we bought a portfolio. We put together a portfolio of houses in Amarillo, Texas. And those contractors there were trying their best to hold me upside down and shake me for every penny I had in my pockets.
Yeah.
And then we pivoted to other vendors, and we pivoted. At the end of the day, we just grabbed our teams from Colorado and paid them to put them up in a hotel, made sure the hotel had a pool and it was comfy. And we paid our guys to go down to Amarillo, Texas, and it was more cost effective.
Yeah.
So thank God I had at that time I had an in-house GC and that was part of my whole ecosystem.
Yep.
And luckily we had them to go down there and kind of save our asses when everybody looked at us as the rich outsiders that were there to be squeezed. So you're exactly right. The more of the process that you can control, obviously you don't want to get, over your skis by trying to buy all the trades and manage all that stuff. But if you can do it incrementally, and in my little ecosystem, well, now I've obviously got the roofs, the siding, the interior cabinets, all the painting stuff. But I've also got the finance and I've got the investor pool. And, so my ecosystem is, I wouldn't say it's complete, but it's a legit ecosystem, and it's completed by my network of trusted third-party vendors that I've had a relationship with for, many years.
Yep.
So, and I forget who introduced me. Maybe Lon introduced me to this idea of the ecosystem, right? What's your business ecosystem? Mm-hmm. So obviously he's got Ironton, and he's got various, Your Castle and whatnot. And what you and I are doing are just modeling people ahead of us, and hopefully compressing that time exposure because we've watched the people ahead of us stumble and thrive and do all the things. So that's why I'm predicting great things for you, man. I mean, it's already, think of what you've done in 2 years.
Yeah.
It's amazing, right? Fix and flips, multifamily syndication, investor relations at a private equity firm in real estate in 2 years, right?
Yeah.
It'd be cool to interview you in 10 years.
Yeah. Yeah. It's been a crazy ride. I mean, when I got laid off from my farmer job in 2021, I didn't think that like this is the position that I'd be in. And it's funny because I tell people, it's like, I've always just wanted like a job where I can go hang out with clients on the golf course, or go skiing with them. Because like those are like some of the most high level relationship building opportunities. You got the guys that play 5 rounds of golf a day or a week. They're doing high level stuff in this world because they have opportunity. So it's like, I just always wanted to be around those kind of people. And so it's exciting to actually, that's what I enjoy most about it is I get to do fun stuff like that, and just have like super high level conversations with people on somewhat emotional topics. People are investing, they want more money for their family and their following generations. Right. So they're just great conversations and it's fun. I don't feel like it's work. Some days feel like work, but most days feel like it's like, everybody says work-life balance. It's more like work-life synergy for me, which I think is what a lot of people should be aiming for, is that work-life synergy. A lot of my business relationships are now friendships and vice versa, which is always fun. And it's just, I'm just grateful that I can be in a position like that. So it's been fun. I'm excited to see what the next 5 to 10 years look like, no doubt. There's a lot of exciting growth coming for sure.
I like that idea of work-life symmetry. That's a good one. That's the first time I've heard that. Yeah. This balance thing is kind of, I don't buy it, right? You're just assuming, okay, 50% work and 50% fun, right? Or 50% life. No, it is this dance. And, my day is sporadic with work and kids and health and relationships. And it's never this, it's not this perfectly balanced deal. It is integrated, right? Yeah. One of the many things that is exciting for me doing now that we've acquired this SprayNet franchise is that my kids get to watch a business get started from the ground up,
100%.
right? Yep. They've seen me get the truck, the trailer, my garage is full of boxes and inventory. They see me go out and start, doing consults. They get to see a real business. When I was just doing loans and syndications and private equity deals, if you ask my kids what I did for a living, they said he talks on the phone.
Yeah.
Right. They had no idea what I was doing. Yeah. Right. Yeah. Dad talks on the phone for a living.
Yeah.
Now they get to see, yet another business that I've started or acquired here. This is kind of start, acquire combo. Yeah. They get to see that and it's tangible. They get to see all the stuff and they're going to see that we're going to remodel my house head to toe. We're going to do all the cabinets. We're going to redo the roof, the vinyl siding, stain the brick, like all things SprayNet offers, we're going to do to my house. So the kids are going to see that. We're going to have, just like I've been doing with my investors and my borrowers with all my lending relationships, I've been doing customer appreciation parties for many, many years. Well, now we're going to start doing customer appreciation parties for our SprayNet clients. So they're going to get to see that. And it's just a little, when you're a dad, it's, I think if you're a decent dad, one of your main focuses is taking care of your kids and your family. The wife and kids are number one, but you can't take care of them unless, you got your act together in all your facets of life, which is health, wealth, love, happiness. But they get to see this tangible business started that does tangible stuff and works with real human beings. Now, don't get me wrong. I still got my private equity deals going. My lending practice is still going. I'm never going to shut that down. So there's still plenty of talking on the phone. Dad talks on the phone, but they're going to see what dad does, what dad's company does to their house,
Mhm.
and a lot of folks' houses, and they're seeing it start in the garage right behind me.
Yeah.
I was just stoked about that.
Yeah.
It is also, it's also bringing me back to my roots. I started a lawn mowing business when I was in fourth grade.
Okay. That's where it
My,
starts. It always starts with a story like that.
yeah.
Not that specifically, but all the great investors now, right? They had a paper route, right? When they were younger. And that's like, I feel like so many of them started out with a very, humble beginning such as that, knocking on doors, mowing people's lawn for some money. And that's where the entrepreneurship journey began.
Oh, dude, it's so true. My mom still lives in that neighborhood, so I drive my kids around. And I'm like, I pretty much mowed every lawn in this neighborhood. But by fifth grade, I was making $100, $100 a day, and so I was rich as a fifth grader.
Yeah.
I had a specialized rock hopper, that I bought a $500 bike back in the day.
Mm-hmm.
But I would just push that mower thinking about ways to make money, right? Oh, I could rake leaves. Oh, I could weed this garden. And it was just, so I did this for hours and hours thinking about ways to make money. And now I'm back to this. I don't want to call it simple, because this stuff is not simple, but it's more straightforward, right? Than private equity or flipping apartment buildings or debt deal. At least maybe straightforward is not it's just more visceral, or more, you could just see it's right there in your face, right? Here's an ugly house.
Yeah.
Now it's beautiful, right? Mm-hmm. Oh, here's this big commercial building. It looks like crap. When we're done, it looks amazing.
Mm-hmm.
So it's fun to do that. I'm just really stoked, and it's fun to talk to anybody who will listen to me talk about it. So
have you read Shoe Dog or studied the story of Phil Knight, founder of Nike? You got to get that book. He started out selling encyclopedias door to door in Hawaii. Then he went from Hawaii to Japan on a world trip and became the exclusive distributor for Tigers, which was the shoe manufacturer in Japan, and brought the company Blue Ribbon in the United States. But it's funny because, he started selling encyclopedias to make money, as part of his first stop on his world tour right after college. So I don't know, but the story is like all about grit. And that guy went through so much crap. He went through so much. He was hemorrhaging money and constantly flirting the line of success and disaster. He was constantly straddling that line for 20 years, or I don't know, it might have been 20, 25 years, and then went public and overnight was worth $30 million. But it's crazy. It's a great story because it's a great story of grit. And Nike, everybody knows who Nike is in the world. It's one of the most recognizable logos and brands in the world, if not, the most. And but it's a great story. You should read it. But it goes into exactly what we were talking about, at the beginning before we hit record on this. Is like, if you're outlasting everybody, and you're just you're building the right team, you're outlasting everybody, and you just keep working at it, and you just keep going through all the ups and downs. Like, your chances of success become greater the more you stick with it.
Yeah, especially if your competition is bailing after 3 years. They get frustrated after 3 years, and then they go start over. And think of an entrepreneur that has to start over every 3 years, over and over and over. That's a tough road, right? Especially because the first 5 years are rough.
Your clock starts over. Your clock starts over. So now you have to go through those same 3 years again. Let's just say my first business didn't work. I'm going to go do a different business. You're going to take business lessons with you, but you're still going to have to endure probably those first 3 years again. But if you would have kept with it, I just think your chance of success get greater and greater the more you stick with it. It's like in sales, the more no's you hear, every no gets you one step closer to a yes. That's what everybody says in sales. And you just make more calls than everybody and you outlast everybody. The longer you stick with it, the greater your chance of success. But you have to have the patience to stick with it. And that's the key thing. And most people, that is a lost virtue in today's world is patience, especially like the millennial generation. And I'm part of it. I have impatience, but the more people I learn from and see, how long they stuck with things, the more patience that I'm gaining as I'm seeing, my mentors succeed, right? So I'm understanding that it's a thing you have to respect. And you got to understand that time, you got to spend a shit ton of time doing it. And
Yep.
that's the name of the game.
It's get in the game and stay in the game.
Yeah.
I mean, your Nike example is perfect. Get in the game, stay in the game for 20, 25 years, and then you're worth 30 million. And now, of course, he's probably worth 30 billion.
He is, yeah. One of the richest guys in the world. He's probably, I don't know how old he is, in his 80s, but he started the company at 24 years old. 24.
I was talking about this. I'm just a serial entrepreneur. I can't stop. But I'm so glad that I picked an industry and I've stuck with that industry. I mean, I bought my first investment property 21 years ago. And so I'm so glad I've stayed in real estate, right? Now even lending, I've swung from, I've lent in ag, I've lent privately, I've lent agency. You take what the market gives you, but I've stuck in real estate, and I'm quite grateful I've done that. So that's, just another example of get in the game and stay in the game. But you're right. If young people, and here I'll go ahead and preach for a second, but if you can have that grit to stick with something and delayed gratification and have that long-term view, you will be a killer. An absolute killer, because so many of your peers are trying something for a year and bailing, and they're trying something else for a year and bailing. So the killers are the ones who can get punched in the face for 5 years. And then, year 6, you're like, wow. And then their friends are like, how'd you do that? Well, I've been doing this for 6 years. Oh, I want to do that. Okay, well, get ready, because it's going to be years. I've tried to help a lot of people in real estate, and some people have listened and done well, and many have not, right? The vast majority have not.
Yeah.
My standard advice to anybody, whether you're a real estate agent, a syndicator, whatever you are, lender, painter, just get in the game and help as many people as you possibly can in real estate. Whether you get paid or not, just help as many people as you possibly can. If you dedicate yourself to do that, within 2 or 3 years, you will have a network that will support you for the rest of your life.
Yep.
Right? The rest of your life. And it's a good network because you've actually helped them. And there's that spirit of reciprocity. There's that just, hey, Nick's a good guy. The people are rooting for you. And yeah, it's 3 years of helping, but then you realize however many people I help, that's going to be proportional to my success too.
Yep.
Right.
Yep.
So
you said reciprocity. I mean, that's spot on. Like, if you help as many people as possible without asking for anything in return, people will want to give you something in return. It might be 5 years, it might be 10 years. They might refer their family, or, which is the greatest compliment you could probably receive. And so you just help as many people as possible. You ask for nothing back. You're just giving back. You're providing free education. You're helping them with whatever the case may be. You're introducing them to other referrals that can help them in their business or in their life. You just help as many people as possible. At some point, it'll come back to you, tenfold.
Guaranteed.
Yeah.
I've been, since I bought this spray net franchise, and now Chris Lloyd's in the painting business and the roofing business. I was a little nervous because so many people know me as a lender and a syndicator and kind of a real estate investor.
Yeah.
But no, I've gotten dozens and dozens of calls and texts congratulating me. Hey, you're adding a great deal to the family, to the ecosystem. The amount of people that have reached out of the blue and said, hey, I'll help you any way I can. You want to come bid my house? You got to talk to my neighbor. He's looking at this. I mean, and that's with a week. That's a few posts on LinkedIn and Facebook. Yeah. And I've just been inundated, and I'm incredibly grateful for these people. And it's worth saying that didn't happen by accident, right? That happened after decades of doing right by people, by trying to help them, by, lending them money or investing their money in one of our apartment buildings or farms, a decade or two of goodwill, and then pivoting or adding something to your portfolio, and the people come out of the woodwork, especially if it's in the same space, right? For me, it's a real estate space.
Mhm.
For us, it's a real estate space. So, let's say in 5 years, you buy a septic company, right? I'm going to be calling you going, dude, Nick, I got friends who have a cabin outside of Breck. They're going to be calling you, dude. Here you go. Here, you've got a client. Or, hey, I've got my place down here. We need to scope the septic, whatever it is.
Mhm.
And that's a poop company, right? You have hundreds of people calling to support your poop removal company.
Yeah, that goes like exactly what we were saying earlier. There's nothing more unsexy than owning a poop company, but people
That's
need
right.
it. Yeah, people do it every day. And if you're septic, like, who are you going to call? Like, nobody knows. There's not like a monopoly in the market of septic tank fixer or whatever. I don't even know what, company that would be, right? But like, if you owned your own business that, provided maintenance on septic tanks or had to replace them or whatever the case may be, like, if that happened to my house, I'd be like, dude, I have no idea who to call.
Yeah.
I'm going to go ask somebody that probably knows somebody that can give me a referral. So, like, again, it's those unsexy businesses, trades businesses, anything that's, typically high margin, but something that somebody uses every single day. Like we were just talking about home inspection, people are buying houses and selling houses all day, every day. And that is never going to stop. Obviously there's going to be volatility. There's going to be more bought than sold and, et cetera, et cetera. But everybody typically needs a home inspection, it's a business that somebody's going to need. It's unsexy. But if you're like the guy in the area and you're the guy that's getting all the referrals, like, you're going to have a very well performing business, most likely. And if you're delivering a good customer experience, it's going to, that's what's going to get you across the finish line. So it's the unsexy, high margin businesses that are pretty mundane, but people use that service every single day. Those are the businesses that I'm becoming so much more interested in learning about, because people want what's sexy, right? They want to do no real estate deals, but then go buy a 300 unit apartment complex and tell everybody they bought a 300 unit apartment complex, right? It's like, nobody's going after it's like traditional private equity. People, they would go after those businesses, grow them, sell them, et cetera. But, to do it as an individual operator and to look for these businesses, you're kind of building your own little portfolio of these service companies that are in such high demand and will continue to be in even greater demand, when the people that started those companies are getting older and they're done with it, so I'm becoming more fascinated with it. The unsexy service type businesses, it's becoming very interesting because I think there's going to be a need for strong operational capabilities in those businesses. And, I'm excited to follow your journey on that because, I'll get to see, I have a friend in a business relationship guy, who's operating a company like that from start to finish, whatever that finish might be. But it's going to be interesting to really kind of see, leverage, your experience a little bit. And I'm excited to just learn your journey as time goes on in this painting business. It's going to be interesting to watch.
Well, I'm glad your eyes are in that direction. Imagine this, you're investing other people's money in apartment buildings, in ground up constructions and funds. You're flipping your own, like you're already building your ecosystem, right? Yep. And then you acquire a home inspection franchise, for example, right? So your network, like you said, just like everybody else, everybody in your network will buy and sell houses, every single one of them, right? And if you're in their ecosystem, if you're in their network, who are they going to call when they need an inspector? They're going to call you, right?
Yep.
If they're looking to you to invest their money in apartment buildings, of course they're going to trust you to have a crew of inspectors to inspect their next, single family acquisition.
Yep.
So that's not a big sidestep away from your industry. That's a complementary part of your portfolio, right? Your own, let's call it your own personal family office. I think everybody should look at their lives as if they're running a family office, whether you've got 100 grand or 100 million, right? Everybody's got a family office. And
Yeah.
so they should have real estate. And obviously, I have to say this, but this is not financial advice, right? Talk to your financial advisor. Got to say that so I don't get in trouble. But in my humble opinion, it might be in people's best interest to have real estate and pieces of apartment buildings and businesses and, a whole family office worth of businesses and assets, right?
Yeah.
And it's a cool way to look at it, as if you are a family. I look at it as a family office, right? Now, do I have official family office in a building that says Chris's family office? No, right? I look at my whole life and I love this stuff, right? That's the other thing. It makes it easier for me because I love business and entrepreneurship. But I look at this as a family office, and I think you should too, and everybody should. And it wouldn't surprise me at all is if you acquired something similar to what I've acquired in the future, whether it's a home inspection business or it's, you name it, that's complementary to your real estate prowess, right? Your real estate history, your real estate knowledge, because it's all complementary. I mean, like I said, I'm going into these houses and, third, fourth, very green in terms of consulting on proprietary paints and resurfacing. Incredibly knowledgeable in real estate. I'll just say that I'm good at it. So it's super easy for me to go in there and talk.
Yeah.
If you were going in there with nothing, right? If you came from, let's say you came from a corporate job where you were, let's say you came from a pharma job, right? Mm-hmm. You just came from a pharma job and now you're pitching home inspection. You don't get that street cred, right? But you went from a pharma job and got a private equity job in real estate, and then you flipped some houses, and then you did some syndications. Like, your stock just goes up with every single deal you do.
Yeah.
So 5 years from now, I'm going to go, hey, Nick, I need a home inspector.
Mm-hmm.
And let's just say you bought a home inspection company. I'm calling you because you're the guy that I know who's done a lot of the stuff that I've done.
Yeah.
And I trust that you're executing that deal well.
Yeah.
And that will be me and dozens of your investors and their friends and. So how's that for a hard pitch on buy an inspection franchise, right?
I'm thinking about it. It's like, I think I told you one of the largest investments at Ironton Capital, just, he owned and operated a landscaping business, clearly did a good job, sold it. And he's one of our largest investors, probably gets like $500,000 in passive income a year. It's unsexy. He took care of people's lawns in their landscaping. I mean, it was very unsexy, but the businesses that are being used every single day, the services that are being used every single day. It's funny. It's like everybody has watched Shark Tank, and you see some of the pitches that come in, and it's kind of funny to see some of them, because some of them you're like, I don't really understand it. But the ones that really do well are something that some kind of service that somebody uses every single day. That's, I think, such a huge thing. And just look at any big business that has become what it is today. Look at Apple, Amazon, Microsoft. We use that stuff every single day. Versus something that okay, I'm going to use this once and then I'm not going to need to use it again for another 5 years. That's the business or thing that I wouldn't want to be a part of. That's something that I wouldn't want to sell or something that I would want to own. I want to own something where somebody has to use it every single day. And if you deliver a good customer service experience on that, you're going to do well. So,
yeah. And imagine, this new world of AI and automation and machine learning, who's the most insulated from those factors, right? It's not the attorneys and the programmers. Mm-hmm. It's the tradesmen, right? They're going to be the last to be replaced by smart robots.
Yeah. And AI can't fix your septic tank. AI isn't going to paint your house for you.
That's right.
A person needs to be there, to fix it themselves, and that's such a good point. That is such a good point, because AI is going to replace a lot of things, but it's not going to replace the trades business. I cannot foresee, it might complement it in some capacity, but at the end of the day, if my furnace goes out, I got to hire some guy to come replace it and come fix it. And I'm going to probably pay him $1,000 to do it because I don't know how to do it. You know what I mean? And AI is not going to be able to fix that for me. So that's such a good point. And that just validates, how important the trades are and how much more important they're going to become as demand continues to skyrocket for it. So that just validated it, even more. Because everybody's talking about AI is going to replace, AI is going to replace, it's going to replace a lot of things. I mean, I can tell you, I use ChatGPT multiple times a day. I don't even ask Google so much for answers anymore. I go to ChatGPT and maybe I'll cross-reference it with Google. But like, I just see it in my own life how it's just replacing so many things that I've been using. Who knows? It's going to replace a lot of things except for somebody coming to your house to paint your house.
That's right. I mean, the macroeconomic factors are in favor of the trades. And, I've had a traditional mortgage lending practice for, 10 years.
Yeah.
And so I've seen every kind of person who makes money. I've seen how they do it.
Yeah.
Right. From attorneys to programmers to, you name it. And I've never seen a poor plumber. I've never seen a poor electrician. I've never seen a poor tradesman. And it's my prediction that they are going to be making, doctor, and some of them already are, especially if they own their own shop, but they're going to be making a doctor type salary as tradesmen. And I shouldn't even say they're going to. They are now. Those who run their own shops are already making that and more.
Yeah.
So, this is in terms of macroeconomic investing and business operations. I'm catching the wave of the trades. And working with the tradesmen and women is fun too. They're fun people. They're hardworking. Just frankly straightforward people.
Yep.
And I used to tell my investors when we were doing all those apartment deals, I'm just betting on the fact that living indoors will remain popular, right? Let's condense what this is. Living indoors, right?
Yep.
Okay. And when I was doing farm, and we're still doing these, I'm not saying this is all in the past, but like our farm deals, I'm betting that the fact that food will remain popular, right? Well, now I'm betting that the fact that, maintaining properties will remain popular.
Yep.
Right? Keeping a roof sealed up so it doesn't leak water will remain popular.
Mm-hmm.
And hey, if you want to go bet on some high-tech, machine learning play, listen, there's going to be plenty of billionaires that are made through AI, right? But they're going to be far and few, but well, I should say plenty. There's those big companies are going to make billions and billions and billions. I don't have a line on the next technology play. I don't have a line on the next AI manipulation. That's just not, I just don't have that. I'm just not smart enough, maybe. But I do know that living indoors will remain popular. Eating food will remain popular. And having someone come and paint your house is essential, or paint your building is essential. Having a roof over your head is essential. If you buy a house, they're going to need it inspected. 99.999% of people will get that inspected. The only people who aren't getting their house inspected are guys like you and me who have done it over and over and over, and they're rare, right? Yeah. Like if I'm buying a place and I've got the time, I'm still hiring an inspector.
Yep, absolutely. Yeah.
Anyway, love it, Nick. Well, I appreciate your time.
Thanks for having me. This is always it's fun just having a regular conversation, but we're doing a podcast about it. So
that's right.
Love it.
And there's plenty of stuff to learn and gain from these conversations. This is why I do this podcast, because I have these amazing conversations with you and other people all the time, and we're on the phone, right? I'm walking around on the phone. I'm like, dude, this should be a podcast.
Yeah.
Right.
It's a different, yeah. Now you've got the business media company, or, the media company. So it is now, it is. I mean, so that's cool. And you're just, you're having just, conversations you would have getting tacos for lunch with somebody, but you're doing it like this, so it's cool, man. I love what you're doing. I love following along, and, you're giving me a lot of ideas with what I want to do over the next, 5 to 10 years.
Well, I appreciate that. Yeah. I mean, I guess we'll close with that, because I do record this with Streamline Business Media, which is my media company, and it's streamlined. It's as streamlined as it gets, because I'm going to hit the end recording here, and then I'm going to hit share with YouTube, and then my posting is done, right? I'm not the guy posting all these videos on my social media. I have a little team that does that. And that team does that for other people. You know, maybe someday we'll do it for you and Trinity Peak Partners. Mm-hmm. But that's my exposure to this. I'm going to hit end recording. It's going to be done. I get to have a conversation with my friend and someone I respect and that I'm rooting for. I get to gain a little knowledge here. It's something we would be doing anyway. Yeah, we've had this conversation anyway. Yeah. So now we've just recorded it. 60 seconds from after I hit stop, I'm done with it. And then my team chops it up into a full length pod, into chapters, into shorts. They put it on the big 5 social platforms. And then, you know, somebody's going to call me and go, hey, that Nick guy is pretty smart, right? Or someone is going to call me and go, hey, congrats on the SprayNet franchise. Yeah. Or somebody's going to call you and go, hey, I've got this inspection company for sale. You want to buy, you know? And that's kind of the beauty of the streamlined process, that you're not on social media all the time drooling on yourself scrolling, right? You're just connecting with your crew, and it's as simple as that. And as always, I appreciate you, and we're going to have you on again, you know, sometime soon.
Can't wait. Thanks, Chris.
Thanks, man. See ya.
Yep, see ya.